Welcome to another vlog, and today we are talking about Peloton. Not only we had quite a crash yesterday, but also today after the market close, I will be live streaming live the earnings of Q1 for this beautiful company, okay? I'm invested since last summer in Peloton, and I just love the absolutely great product that they have, okay? Let's talk about what happened yesterday. Or you know what? Let's talk about what's the overall market all about. The current situation for growth stocks is not the best. I mean, at every, indicator that we see is somehow pointing to the direction that the Fed cannot leave the pipe for fresh money open, minimum at these levels, okay? So I think they need to, close the valve a little bit so not that much money comes into the market by printing, by other incentives that the Fed has. And, when this happens, and specifically when the interest rates would be hiking earlier than we're expecting, then this would be a very bad sign for growth stocks, okay? Now, this is obviously, at least a couple of years away from here, maybe 1 year, 2 years, okay? I think like 2023, 2022-ish, end of, we don't know, okay? But definitely this would be not so great because a lot of growth stocks are actually in need of cheap money, okay? This is the fuel for them. So when this is going away, then we definitely see a big downturn, not maybe even a big crash. Because think about it, currently everybody is thinking about the bond yield. But who is actually buying the bond yield? The current bond yield gives you basically 1.6, 1.7% on your money. But who's buying that? I mean, if you're thinking about it, inflation is at least 2%. Okay, so even when you get from the government 1.6 for your credit that you give the government and the money gets worth less 2%, what's the deal about it? That doesn't make sense, right? Exactly. And that's why most of the bond trading is actually speculation. They're getting the money from the government, okay, for very, very less money. So for very, 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 very less interest rates, let's say, 0.25. And then they are giving it back to the government, okay, through bond purchase and getting, 1.6 in return. Great business, right? Especially if you consider the bond yield is one of the most risk-free assets there is, okay? However, though, what happens if the, rate is hiking for the interest? Well, then we're coming in a little bit of a bad situation, let's say, okay? So you can see here not only the growth stock market, but the overall stock market and bond market is just, crazy right now. Now, let's put this to the side. Let's talk about Peloton. So Peloton is actually on huge discount, and always when, my favorite stocks got this crazy discounts, then I am alerted, okay? Let's look into the stock. So the stock yesterday just was about, 97, all right? Then the news came out, you might have heard it, if not, their treadmills have an issue that if, there's some infants or young children, they can be hurt by it. And there was also one fatal case, which is not okay at all. And they decided to do the right step. They decided to call them back, the treadmills, okay? And this obviously, gave the stock an absolutely, crash that day. And we went from basically 97, 98 to 82.62. And I think pre-market, we also look negative a little bit. So you can see quite bad for Peloton. However, guys, if you think about it, those companies that, going through history, they always had this kind of things. Think about Tesla. Think about other companies that had really, really trouble, recall situations where they have to get the product back and so on and so forth. So currently I see that as a temporary pain, and even more pain as it should be. The company should not be worth, 15% less, okay? And now comes the big opportunity, okay? Because we will talk about the earnings in a second, but think about this company was just a couple of months ago at 150, 60, I think even almost 170, okay, as you can see here, mid of Jan. And I think that, in the just core of this company, you can see a fantastic management. They have lots of cash in the bank. They basically have a product that everybody wants, and they cannot produce enough from it. They have so much demand. And then finally, they are, this futuristic fitness content company that I think is the right approach for future of fitness. I think they can do what Netflix did to television. Amazon did for, shopping. Peloton could do this to absolute fitness, okay? Usually, you go into your fitness and into your gym and work out and go home. Now, Peloton offers not only the product for your home, but it's basically have, this all interactive community and, superstars like Beyoncé having their own content over there and so on. It's like the next generation of fitness, of gym. Of course, there will be, not everybody will use it, but just a small percentage. And, this currently small percentage is more that they can, offer in products as of now, guys. Okay, so I think that it's a no-brainer if you are thinking that people will still go to gyms, because also Peloton have gyms, right? So it's the next generation of gyms, which, with all of that combined is a very, very great opportunity. But let's talk about earnings right now. So let's talk about the earnings for Peloton. And, Peloton is in a very, very interesting situation because the earnings per share are very close to, loss versus black numbers, so profit, okay? And usually what I have learned, if a company can surprise with a profit instead of a loss, well, the stock goes skyrocket. I'm telling you that, okay? So here we go. I'm just letting you know the following. So here is the earnings, and the earnings is expected today. You are seeing that most of the earnings per share was actually better than expected, at least in the 3 or 4 quarters, so 75% of the cases. And then what else is important? I think here's nothing really that matters more, but here you can see quite nicely that the light blue or turquoise is the reported versus the expectation, which is the dark blue. So you see in every single case, it was either much better or a little bit worse than expected, as you can see. So Q1 2020 was not so great. But if you then go into Earnings Whispers, which is a great website for showing, okay, what is the market thinking and what, the overall, whispers on the Wall Street is going on, So here you can see that, the consensus is minus $11 cents versus the Earnings Whisper minus $3 cents. So you can see it's very, very thin to making a profit. So revenue at $1.11 billion. I think, it's a really, really great opportunity. And here you can see what the stock actually did after the earnings. So every time the stock reported, pretty much you have seen a gain into the stock. Okay, so here, for example, in November was a quite big drop, and then the earnings came, and then the stock went to all-time highs. Here as well, this was, I think, must be September. And then obviously in February, when we had the earnings, then the overall market was not so great. So the stock went down with all the growth stocks. So here you can see, it's a quite interesting game now for Peloton. I will be live today, so make sure to be subscribed, make sure to like, and I see you in just a couple of hours.